Stocks are one of the most popular financial instruments in the world. But what does a stock actually represent? Find out how and why stocks are created, and what buying a stock means for investors. A stock represents ownership in a company. When you buy a stock, also known as a share or equity, you are purchasing a small portion of ownership in that company. Here are some key points about what a stock represents. Ownership stake. Each share of stock represents a proportionate ownership stake in the assets and earnings of the company. If you own more shares, you have a larger ownership stake. Voting rights. In many cases, owning stock entitles you to vote on certain corporate decisions, such as the election of the board of directors or approval of major company policies. Dividends. Some companies distribute a portion of their profits to shareholders in the form of dividends. If you own stock in a dividend-paying company, you may receive periodic payments. Capital appreciation. The value of a stock can fluctuate based on the company's performance and market conditions. Investors buy stocks with the hope that the share price will increase over time, allowing them to sell the stock at a profit. Liquidity. Stocks are generally traded on stock exchanges, which provide liquidity, the ability to buy or sell shares relatively quickly and at a fair market price. Overall, stocks are a fundamental component of investing in the equity markets and can offer opportunities for growth and income depending on the performance of the underlying company. Buying stocks for investors means acquiring shares of ownership in a company through a stock market transaction. Here's what it entails for investors. Ownership stake. When investors buy stocks, they become partial owners of the company. The number of shares purchased determines the extent of their ownership in terms of voting rights and potential dividends. Potential returns. Investors buy stocks with the expectation that the value of the shares will increase over time. They may profit by selling the shares at a higher price than they paid, capitalizing on capital appreciation. Income generation. Some stocks pay dividends, which are distributions of a company's profits to shareholders. Investors can earn regular income from these dividends. Diversification. Buying stocks allows investors to diversify their investment portfolios. By holding stocks from different companies and industries, investors can spread risk and potentially enhance returns. Liquidity. Stocks are traded on stock exchanges, providing investors with liquidity. They can easily buy or sell stocks based on market conditions and their investment objectives. Long-term growth. Investing in stocks can be a strategy for long-term wealth accumulation. Historically, stocks have provided higher returns compared to many other asset classes over extended periods. Risk considerations. Investing in stocks carries risks, including market volatility, company-specific risks, economic downturns, and regulatory changes. Investors should assess their risk tolerance and conduct research before investing. Overall, buying stocks is a way for investors to participate in the growth potential of businesses, generate income, and diversify their investment portfolios, albeit with associated risks. It's important for investors to understand the fundamentals of the companies they invest in and to have a well-defined investment strategy aligned with their financial goals. ChatGPT stocks are created through a process known as initial public offering, IPO, or issuance by a company. Here's how the creation of stocks typically occurs. Decision to go public. A privately held company decides to raise capital by offering ownership stakes in the company to the public. This decision is often made when the company needs additional funds to expand its operations, pay off debt, or achieve other financial goals. Hiring underwriters. The company hires investment banks or underwriters to manage the IPO process. These underwriters help determine the offering price of the stock, coordinate with regulatory bodies such as the SEC in the United States, and market the offering to potential investors. Preparing documentation. The company prepares prospectus, which is a legal document outlining important details about the company, its financials, operations, risks, and the terms of the offering. This document is filed with regulatory authorities for review and approval, setting the IPO price. The underwriters work with the company to determine the initial offering price of the stock. This price is influenced by various factors, including the company's financial performance, market conditions, and investor demand, offering shares to the public. On the day of the IPO, the company offers a specific number of shares to the public for purchase. Investors can buy these shares through brokerage firms participating in the offering. Trading on stock exchanges. After the IPO, the company's shares begin trading on a stock exchange such as the New York Stock Exchange or Nasdaq. Investors can buy and sell these shares on the open market, and the price of the stock fluctuates based on supply and demand. Secondary offerings. After the IPO, companies may also issue additional shares through secondary offerings to raise more capital or allow existing shareholders to sell their shares. Overall, the creation of stocks involves a structured process of offering ownership in a company to investors in exchange for capital, which the company can then use to grow its business. This process provides companies with access to public markets and investors with opportunities to participate in the growth potential of businesses. Hey everyone! Welcome back to my channel. Today, we're going to talk about stocks. Specifically, I'm going to share some insights on 10 stocks that have had impressive one-year performances and why you might want to consider them. First up, we have Adobe. Their stock price has increased by a whopping 65% over the past year, thanks to their strong Q2 earnings, which exceeded expectations. Next on our list is Zoom. Despite the economic downturn, their stock has soared by 51% this year, largely due to their partnership with Microsoft Teams and the acquisition of Five9. Moving on, we have Cisco. Their stock price has surged by 50% over the past year as they continue to dominate the cybersecurity market and expand into cloud computing through hybrid cloud platforms like Amp1. In fourth place, we have Alibaba Group Holding Limited. Their stock has skyrocketed by 49% this year following their partnership with Starbucks China and new coffee chain Luckin 2.0. Next up is Micron Technology. Their stock has grown by 43% this year as demand for memory chips continues to rise amidst a global chip shortage. Micron also made significant progress in reducing its carbon footprint by upgrading its data centers with renewable energy sources like solar and wind power. Now let's talk about Mastercard Inc.'s stock price. It's been on a roller coaster ride this year, but has still managed to gain a solid 29%, driven by a rise in global travel spending